Hello, listeners. Welcome to the Morning Market Update, the podcast powered by AI. I'm Joe.
And I'm Sarah. Today is February 4th, 2026. Let's dive in. We are seeing some significant turbulence as the opening bell approaches in New York. Currently, S&P 500 and Nasdaq futures are wobbling after a tech-led sell-off yesterday. The big story in the US right now is what analysts are calling a software wipeout. A new AI automation tool released by Anthropic has sent shockwaves through the sector, with investors fearing that traditional software companies might see their business models disrupted almost overnight. While the Dow managed to edge higher yesterday thanks to some surprisingly strong jobs data, the Nasdaq is under pressure. We're also keeping a close eye on the Russell 2000. Mid-caps are feeling the squeeze as the higher-for-longer sentiment regarding volatility starts to settle in. And of course, everyone is holding their breath for Google's earnings on deck today. It's a polarized market. While some AI names like Teradyne are popping 12% on compute demand, others like AMD are dragging the index down. We're also seeing a fascinating move in the fear trades. Gold has reclaimed the $5,000 an ounce mark, which tells you everything you need to know about the current appetite for risk.
Moving north to the 6-9, the TSX in Canada is also navigating these choppy waters. The Toronto Index is feeling the weight of the global shift in energy and tech sentiment. One of the unique stories hitting the Canadian wires this morning involves our investment watchdogs. Following the long-standing shadow of the Quadriga CX collapse, Canada has officially rolled out strict new crypto custody rules. This is aimed at protecting institutional investors as Bitcoin faces what some are calling a full-bore crypto winter. On the corporate side, we're seeing Canadian energy players bracing for a bruising earnings season. With crude prices swinging wildly as traders weigh Middle East tensions against a report of lower U.S. stockpiles, the TSX energy heavyweights are under a microscope. Investors are specifically worried about whether these oil giants can maintain their generous shareholder returns if crude doesn't stabilize soon. It's a cautious morning in Toronto, with the index expected to track the broader cautious sentiment seen in the U.S. futures.
Looking across the oceans, it's a tale of two continents. In Europe, the Eurozone inflation rate has sunk below the ECB's 2% target, hitting its lowest level in over a year. You'd think that would be cause for celebration, but the markets are mixed. The FTSE in London and the DAX in Germany are seeing an interesting trend. Euroclear's CEO Valerie Urbain noted that investors are actually moving assets out of the US and into Europe to diversify away from the volatility created by the current US administration. Over in Asia, the story is dominated by trade. The Nifty 50 in India is in the spotlight after President Trump signed a fresh US-India trade deal. Analysts expect Indian pharma, manufacturing, and IT stocks to be the primary beneficiaries. Meanwhile, the Nikkei and Hang Seng are grappling with the same AI disruption fears we're seeing in the West. And we have to mention the currency markets. The yen remains a point of focus as the US dollar reacts to the resignation of Fed Governor Stephen Moran.
Let's look at the major corporate movers in North America, because there are some massive swings happening. First, we have to talk about AMD. The stock is down a staggering 9% after its earnings report. Even though they've been a darling of the AI boom, their forward-looking guidance didn't quite live up to the massive hype. It's a show-me-the-money moment for chipmakers. Then there's Chipotle, usually a rock star, but the stock is sinking this morning. They reported falling foot traffic and gave weak guidance, which has now dragged their market value down 33% over the last year. On the brighter side, Palantir is rallying after beating estimates, proving that some AI-adjacent companies can still surprise to the upside. And for the consumer staples fans, PepsiCo reported fourth-quarter earnings that topped estimates. They're actually planning to cut snack prices to lure back customers, which is a rare sign of deflationary pressure in the food aisle. Finally, keep an eye on Disney. They're losing ground this week following their Succession announcement and Q1 earnings, with the stock shedding about 7% since Monday.
Globally, the corporate news is just as dramatic. The biggest shocker comes from Denmark's Novo Nordisk. Their shares plunged after the company forecasted a steep decline in sales, as much as 13% for the year. This is a clear signal that the price war in obesity drugs is intensifying. In the financial sector, UBS is seeing outflows from its U.S. wealth management arm, which is weighing on the stock. We're also seeing some fascinating cross-border moves in the auto industry. Ford is reportedly in talks with China's Geely to share manufacturing capacity in Europe. This is a massive shift as Ford overhauls its EV strategy to compete with cheaper Chinese imports. In India, pharma stocks are the ones to watch as they prepare to ramp up exports under that new trade deal Joe mentioned earlier. And we can't ignore the drama in South America. Venezuela has been busy reassuring China that their oil prices won't be dictated by the U.S., following the capture of Nicolas Maduro. It's a high-stakes game of energy chess that has Beijing watching very closely.
Turning to the macro picture, the geopolitical landscape is shifting beneath our feet. The big news out of Washington is the resignation of Stephen Miron from his post as chair of the Council of Economic Advisors at the Federal. This leaves a vacuum in economic policymaking at a very sensitive time. Meanwhile, the White House is pushing a U.S.-India first trade agenda, signed specifically to ensure America isn't left behind as Europe signs its own pacts. In the Middle East, there's a diplomatic shift as Iran has asked to move scheduled talks with the U.S. from Turkey to Oman, specifically requesting the agenda be limited to their nuclear program. This has kept oil traders on edge, causing those swings Sarah mentioned. Finally, we have to touch on the Burry factor. Michael Burry, of The Big Short fame, is back with a grim warning. He's calling the current Bitcoin plunge a death spiral that could trigger a $1 billion liquidation in gold and silver as institutions are forced to deleverage. When Burry talks about systemic risk, the market usually listens, even if it doesn't want to hear it.
So, what should investors take away from all this? First, the AI trade is maturing and becoming more discerning. It's no longer enough to just mention AI in an earnings call. Companies like AMD and the software sector are being punished for any perceived weakness. Second, keep an eye on the flight to quality and the Europe pivot. With inflation low in the Eurozone and assets moving across the Atlantic, there might be value in diversifying away from U.S. volatility. Third, the crypto winter is real and institutional. The new Canadian rules and Michael Burry's warnings suggest a period of deep consolidation for digital assets. Lastly, the consumer is showing signs of fatigue. Chipotle's traffic drop and Pepsi's price cuts suggest that the post-pandemic spending spree might finally be hitting a wall.
That wraps up today's update. I hope you gained some useful insights into these rapidly shifting markets.
Add your thoughts in the comments and follow for more such updates. This is Sarah.
And Joe, signing off.